My name is Crystal Tosin. I am one of the supervisors here in the Office of the Chief Financial Officer, the Grant Financial Management Division. Our division actually negotiates indirect costs. And so today you'll be learning about indirect costs and the proposals and what we will need from you if you are going to have an indirect cost negotiated rate. We have many of our esteemed colleagues on the panel from the Office of the Chief Financial Officer, and these are the people who actually review all of your indirect costs. So you will be able to ask any question you would like. You can put your questions in the chat. We will be answering questions at the end. Also, just to let you know, this is very interactive. So we're also going to need your participation as we ask questions throughout, just to make sure that you're following along, and also just to kind of check your knowledge on some of the things that we're going to go over today. So make sure that you're just on the computer, make sure that you're in the chat, make sure that you're responding. And so we want to make this as interactive as possible, and we want you to just take away all of the knowledge that you can possibly take away from indirect costs on today. All right, so we will begin now. We like to start promptly. It is 2 o'clock, and so we will get started. Sarah is also here. She will be advancing the slides. Hatim Rita is my esteemed colleague as well, so I will present the first half, and she will also present the second half. All right, thank you so much for joining us today, and we do hope you learn a lot during this process. Okay. We're going to talk about direct costs. We're going to talk about indirect costs. We're going to talk about all the types of costs. And so when we start talking about costs, this is in terms of your budget. When you start preparing your budget for review, we're talking about costs here. So we're talking about a direct cost. We're talking about indirect costs. And so today we're going to explain the difference between both of them. So your direct costs, you can have some administrative costs and program costs in direct costs. You can also have administrative and program costs in your indirect costs. So it gets a little confusing, which is why this is such a well-attended training today. And so we hope to just kind of break that down for you just a little further as we go along. All right, next slide. So when we start talking about direct costs versus indirect costs, those direct costs are those easily identifiable costs, very specific costs. It's particular to a cost objective, and we'll go over cost objective in a second. Those are things like your direct salaries. You know exactly that these particular costs are for this particular grant. You can directly identify them. You know what they are. These are your direct costs. Now, your indirect cost is totally opposite than that. These are the costs that, you know, they kind of fall in line of that gray area. They're not direct costs at all, so you can't easily identify what they are. Those are things like rent. You think about your rent. Think about a building that you're renting, right? You just typically don't process one grant. You may have other sources of income. You may have a DOJ grant. You may have another grant. You might be a for-profit organization. So you can have all streams of income, but you're sharing the rent with all of those sources, right? So you may have a grant. You may have 3 grants from different agencies. So the rent, think about a shared cost. Same with accounting. If you have an accountant that's working on that grant, they're just not working on that grant. They're processing payroll for your entire organization. So those are the type of costs that you can't readily say, you know what, this utility is just for grant A. This rent is just not for grant A. The accounting, that's accounting for everything inside the building. You know, we can't readily say that this accounting is only working on this particular grant. This is why we do allow for you to have some indirect costs. It's not directly towards the grant, but indirectly it impacts the grant, but it impacts your entire organization. So those are your indirect costs. All right, next slide. I mentioned briefly a second ago about cost objectives. This is just another way to kind of look at your costs, right? So I typically explain this, and I say, I was working for a nonprofit organization for years, and that nonprofit organization, we had specific program people that will go out to teach that particular program. So everyone who went on that activity, who went out to teach that program, those teachers, we knew that they were associated directly with the grant because the grant funding was just funding that particular cost. So sometimes you can tell by the program that you're servicing, by that particular award, by a particular activity. You know, you may have this one activity that's only specifically related to that grant. And if that's the case, you can kind of identify that as direct cost. And so when we start looking at these cost objectives, what we're saying is when you can probably divide them out by the type of objective it is, by a division, this one division. They may only work on this one particular grant. So now you can tell that that division is specifically directly related to the grant and will be direct cost under that grant. So when you look at cost objective, we're just kind of saying, here's another way that you can kind of determine if you're having problems identifying direct cost versus indirect cost. You can look at some of these cost objectives to see if a particular cost falls into one of the objectives. All right, next slide. So this is your first knowledge test, and we're going to be looking in the chat just to make sure that you're responding. So the first knowledge check, and the question is, all administrative costs are indirect costs. Is that true or is that false? All administrative costs are indirect costs. We see answers coming in the chat, and I love the answer so far. I love it. I love it. All right, so you all are answering correctly. Thank you for, because it's late, it's 2 o'clock in the afternoon, so talking about indirect costs is hard. So yes, the answer is certainly false. I talked about it earlier. It could fall into either category, right, depending. So here's some questions here. The salary paid to a CEO of an organization, do you think that that will be direct cost or indirect cost? The salary paid to a CEO. Someone says direct, indirect. Most people are saying indirect. Some people are saying direct, though. Okay. So you can advance. It depends. I like that. We always say it depends. I like that. So the salary paid to a CEO of an organization is generally an indirect cost. Because let's talk about it for a second. So a CEO, right, of an organization, they're just not tied to one specific grant, right? They're just like the accountants. They're kind of tied to the entire organization. They may go out and do some fundraising. They may spend their time doing other things. So generally speaking, most of the time, the CEO will actually fall under indirect costs because we can't specifically tie 100% of their time to the grant, okay? But I say it depends. Like, let's just say the person who said it depends. So we always have some small exceptions to the rule, right? Let's just say that's the only grant you have. That's the only thing that the CEO is working on is that particular grant. And maybe they may fall under there. Typically, they're servicing the entire organization. All right. Next slide. Travel expenses of a staff to train victims of human trafficking. Those travel expenses of the staff, do we think those are direct or indirect costs? I'm seeing the answers come in. Most people are saying direct. Everyone's saying direct costs. Absolutely. Travel expenses, if you have travel expenses to train victims, those are your staff that's going out. It's specifically related to a grant. That's one of those cost objectives I was just talking about. Let's just say you have a team that's what they do. And let's just say your grant is to service victims of human trafficking or to train victims or things like that. So you know that that's grant specific, and those travel expenses to go to do that training is a direct cost to the grant, not an issue at all. That is definitely a direct cost. All right, next one. What about fringe benefits paid to the accountant who processes invoices? Because we do get fringe benefits. A lot of people are saying direct. Okay. Some people are saying indirect. So again, accounting services, those fringe benefits fringe benefits fall under that as well. Accounting services is typically, when you start seeing that, typically will be indirect costs. Again, they're accounting for everyone in the organization. They're accounting for all of the departments. So typically, they're not specifically related to one particular grant, right? So even their fringe benefits wouldn't fall under direct services, but they will also be indirect as well. All right, next one. Testing kits purchased for a program funded by OVC. What about those testing kits that we purchased for a program? Of course. I appreciate you guys. You guys are pretty smart. Testing kits purchased for, of course, it is a direct cost. I mean, whenever you have to purchase anything, and you'll see that when you fill out your budget and you start spending your funds and you start filling out, applying for grants, if you need testing kits or whatever you need to fund your program or to make your program, not fund your program, but to make your program work, like such as kits and things like that on the supplies and materials, then you know that that's a directly related to your grant. All right, so good. That was a great exercise, and you all did really, really well on that. Thank you so much. All right, so next slide. Indirect cost allocation. All right. We can advance forward. All right, so if you're a state and local government, which you'll have something called the cost allocation plan, right? So the cost allocation plan, these are shared services, and how I typically will explain this is like to say that you are a state government and and there's different counties. So let's just say the state of Maryland we have PG County, we have Montgomery County, we have Charles County, and sometimes those services under those counties get shared. And so what they will have is what's called a cost allocation plan. So it's whatever rate that you get from that cost allocation plan, we can actually take that rate and use it as your indirect cost rate as well. Some of those services, think about like a statewide pension plan, for instance. So if you're sharing that service, like the state of Maryland may be running that service for all of their local governments. And so just know that if you are in a state, a local and county government, you have what's called the cost allocation plan. And then there's the indirect cost rate, and we'll go into a lot under the indirect cost rate and how that's calculated and how you can use it in a second. But just know that that those two exist. All right, next slide. And then we have the state cost allocation plan. This is called the SWACAP. I won't go into great detail about the SWACAP actually, because most of the time the state, they actually have huge contractors that would actually calculate this entire plan. But again, think about the SWACAP as allows state to charge costs of central services to federal awards. Again, those shared services by the state. And so, and it's a huge calculation. We do have it in here. We'll just show it to you, but most people will never calculate this. And so I don't spend a lot of time here because I want to get all of your questions in and answered, but just understand that this does exist. All right. Next slide. Your indirect cost rate. So we'll go over it in a second, but when we're thinking about calculating, okay, when you're looking at your budget and you want to recoup some of those funds, right? Because you're perfectly allowed to recoup and be reimbursed for some of your indirect cost services. Again, those accountants, that rent that you're sharing, that's taking up space, that you got to pay utilities and all those things, you may want to recoup some of those costs, right? And so what we end up, what you can calculate is what's called your indirect cost rate. And this is how you do it. You take everything that's in your indirect cost pool, and we'll go over that calculation in a second, and you divide it by your direct cost base, meaning that all of your direct services, and then you get what's called your indirect cost rate. So on your budget, now you can put your rate of indirect cost and the cost that you've calculated of what you deem is your indirect cost related to the budget, okay? And it's perfectly fine. If you can recoup some of those costs, do so. Exactly. All right, so next slide. Here's the indirect cost rate example. So let's just say your indirect cost, and I just spoke on this, but this is just, you see it in numbers actually. So your indirect cost pool, $20,000, your direct cost base, and we'll go further into detail on that as well, equals your indirect cost rate of 20%. And that's what you can use in your budget. You can use 20%, the indirect cost rate of 20%, and you can calculate that, and you can actually put that as a budget line item under indirect costs when you're preparing your budget. And if you haven't done an indirect cost and you want to recoup it, you can still do that. You can do what's called a budget modification, and you can actually ask for indirect cost rate. Not a problem whatsoever. All right, so next slide. Here are some generally unallowable costs. And we say generally unallowable because someone typed it in the chat, because always it kind of depends, right? So generally unallowable costs, of course, alcohol, beverages, entertainment costs, fines and penalties. If you didn't pay something on time and you got a fine for not paying it because you were late, that's not our fault. That's on you. So you eat that cost. So just wanted to make sure that you're aware that some of the costs are just really unallowable. So when you start calculating your indirect cost pool, what's unallowable over indirect is also unallowable, and your indirect cost pool as well. And the reason that we say generally, I like to tell a story. So think about alcoholic beverages, right? Of course, we can't have alcoholic beverages. The government isn't going to pay for that. So let's just say that you're a service and you run an undercover sting operation and you have to buy alcohol or whatever. You're the alcohol, tobacco, and firearms. You have to buy alcohol as a part of the operation or something like that. You got to buy something that's a part of the operation and it's a part of the grant. Then yes, that would actually be allowable at that point because it's a part of your grant. It's a part of what you're doing. And so while we say that all these calls are unallowable, we say generally unallowable because there are some instances where they could be allowable, but very rare instances, but could be. All right. All right. So next slide. All right. Here's a test your knowledge. All right, make sure you're still with me. We're checking. Indirect cost rate provides a basis for what? A, is it charging the legislature? Is it B, billing the federal government for those costs that indirectly benefit the federal project? C, recouping all non-federal entity costs regardless of impact on the federal grant program? Or is it D, indirectly charging the federal for property costs? And you all already answered before I even finish those items. And you are absolutely correct. Again, yes, indirect costs it was B, and it was actually for billing the federal government for those indirect costs. That's exactly right. We tried to make it easy for you guys. All right, so let's talk about how we start calculating some of these things. Your direct cost base. Next slide. So we have several base that you can use. I will tell you that most people use the modified total direct cost base, but you don't have to. You could use a direct salary and wages base. You can use salary, wages, plus fringe benefits base to calculate your indirect cost base, and we'll go over that calculation in a second. And I know some of you are not accountants, but we made it simple enough so you can actually understand it. So we're just talking about the different cost bases, and we'll go over the next slide. So when we start talking about these different bases, right? So we're talking about total direct salaries and wages. This includes only direct salaries. This is how you calculate your indirect cost rate. When we talk about only salaries and wages, or you can use salary, wages, and those fringe benefits. And over to the right, well, my right, I guess it's your right, I'm not sure, but as you see the calculation, indirect costs, let's just say your indirect costs, once you added all that up and you accounted for all your indirect costs that you're going to, the percentage that's going to go to that grant, your direct cost is based on your salary and wages, if that's going to be a factor, and your fringe benefits. So your total direct cost, let's just say your total direct cost is $250,000. And so in order to get your indirect cost rate, I just wanted you all to see it in numbers. Let's just say you're $75,000 over your salary and wages of $200,000. You can have 37.5% as an indirect cost rate calculation, or let's just say you use just total salary and wages and fringe benefits, and then you do that calculation, then it'll be 30% of your indirect as an indirect cost rate. So those are just some of the bases that you can use: salary and wages plus salary, wages plus fringe benefits. We do have people who use both of those, but for the, I would say majority of people use the next one that we'll talk about in a second. But that's totally up to your particular agency. You all deem what's beneficial for you guys. We don't make that determination as to which rate you choose. That's up to you and your accounting team. All right, next slide. Modified total direct cost, and we'll go over a really great example of this. This includes your direct salaries and wages, which we just saw, fringe benefits. This includes your material and supplies, your services, travel, and up to the first $50,000 of each subaward, regardless of the period of performance. And I wanted to read that verbatim like that because because a lot of times when we send back budgets that people send to us, a lot of times this is kind of where they miscalculate that cost, particularly when you have some subawards. They're not subtracting out just the $50,000 of that subaward, for that performance period. So we did a really good slide, next slide, showing you how to actually do that. All right, next slide. All right, so again, modified total direct cost base. This is probably the one that's generally used. When you start calculating that direct cost, you're going to take all of your costs, all of the salaries, everything I just mentioned, but you're going to take out your equipment, any capital expenditures. You're going to take out anything that's tuition charges, rental space, participant costs, and each subaward in excess, anything that's over the $50,000. You can keep $50,000 in, but you have to remove all of the rest of the subaward money in order to get your base. And just the opposite of what it does include. So it includes direct salaries, your fringe benefits, material supplies, service, travel. It's up to the first $50,000. All right. I see a lot of great questions coming in. Okay. So I want you all to pay really, really close attention to this budget. Okay. You can go up some more. Yeah. So modified total year one calculation. All right. Okay. Stop right there. Oh, right there. Okay. So, all right. So let's look at year one. Everyone just take a second. Let's just look at year one. All right. So we're going to try to calculate this modified total direct cost. These are the total direct costs year one. Year one, we have a total direct cost of $307,000. Those are total direct costs. And I ain't going to stop because I wanted to ask you guys what you take out. What are we going to subtract out of this? So she already put up, we're going to subtract out $25,000 of equipment because remember when you're calculating that direct cost, we're going to take out equipment. That's $25,000 here if you see it in year one. Subaward A, remember I said Subaward A has $65,000 in it. But remember I told you that you can only have up to $50,000 in that subaward. So the thing that we're going to subtract out is $15,000 because subaward A is $65,000. When we subtract out $15,000, we actually are left with $50,000 in that subaward. And the reason I wanted her to stop because I wanted you all to think about this. Subaward B, how much, if any, are we going to subtract out? So subaward B in year one is $40,000. Are we going to subtract that out, or is going to be zero for that? Okay. Some people said 40,000, 50,000. Okay, zero. Okay. All right. So I'm kind of looking. So some people are saying that we're going to subtract out 40,000. Okay. So bring the next one up, Sarah. Subaward B. We're not going to exclude anything. Why? Because remember, I told you that you can keep $50,000 in there. And the only thing that was in there was $40,000, right? So we're going to keep that in there. So the only thing, so we're not going to subtract out anything for subaward B because $40,000 is okay. So next, Sarah. Rent. Remember, I told you we're going to exclude rent. And then we're going to And we're going to exclude what else? We're going to exclude tuition. Yeah. So your direct cost is 307. The next one, Sarah. But once we start subtracting out all the exclusions, you're left with a modified total direct cost, meaning that now we're modifying your direct cost. So these are your direct costs. This is what's on your books, your accounting books. You have $307,000. This is how much it's costing you. But when we start calculating our indirect costs, we need the modified total direct cost, right? So these are the things that we're going to exclude. All right, next. And let's just say we're using that de minimis rate, and we're going to go, we have a whole section just on de minimis rate, okay? We have a whole section just on de minimis rate. And so you're going to take your modified total direct cost, you're going to multiply it by the de minimis rate. Let's just say you choose to take the de minimis rate at 15%. We'll talk about that. For those who do not know what that is, just hang on, we're going to let you know. Indirect cost. Your indirect cost that you can recoup, and you can put this amount on your budget, is $34,000. This is very important. This is where we send back a lot of budgets because we're not calculating that modified total direct cost. People are still using the direct cost. They're using all of those things that's listed, and they're not subtracting out those exclusions. All right. So it gets tricky in year 2. So let's just say this is the same budget. So let's go to the next one. Next one. Next slide. So for year 2, let's look at year 2. Okay, you can keep going. Year 2, the budget is $292,000. What are we excluding? Okay, you can bring up the next one. We're excluding, definitely excluding equipment. Don't bring up the next one yet, Sarah. So, Sarah. Okay, they may not have seen it. So sub-award A is tricky. Sarah showed it, but I just want to make sure that you're on board. That's what we're looking at year 2, sub-award A, $65,000. We're excluding $65,000. So some people are saying they're excluding $30,000, $65,000. Yes. We subtract the entire amount for sub-award A. Okay, so I want to just pause here for a second. So, yes, I see a lot of you all are getting it. A lot of you all are getting it. So some people are getting it, some people not. Okay, so let's talk about this. Sub-award A is a total of, so $65,000. So remember I talked about subtracting out that over $50,000. Remember, in year 1, we actually left $50,000 in the budget. We only subtracted out $15,000. So we left $50,000. So year 2, they're not able to include any of that subaward because we've already maxed out that $50,000. Remember, so that's why when I talked about period of performance, this is what I mean. So this is across the board. So no matter if you have 65 in year 1, 65 in year 2, 65 in year 3. If we put everything, the $50,000 in year 1, then you have to now exclude everything going forward because we've already recouped the $50,000. It's a one-time $50,000. So not year by year. And this is very important, very, very important that you all get this because we see this a lot. We send back budgets a lot for this particular issue. So just make sure you understand if you've already had $50,000 in year 1 and we've already accounted for it, then the subsequent years you have to exclude everything. So don't pull this up yet, Sarah. Subaward B. Let's talk about it. Remember last time for subaward B, we left the $40,000 there because we didn't get up to 10. And so now we're in year 2, and now there's another $40,000. So now what are we thinking? What can we exclude? I'm seeing different answers in the chat. So think about it before you just put anything in. Remember the $50,000 threshold for the period of performance. Right now we have 40 in year 1, 40 in year 2. That really totals $80,000 when you look at it in totality. So what are we thinking? Okay, I see a lot of the right answers. All right, Sarah, you can advance it. Great. Everyone who said $30,000, you get it. Okay. So you look at it in total. So in total, it was $80,000, right? And so we didn't exclude anything that first year because they were under that 40. But this year, we are going to exclude 30,000 because we're going to leave them with 10 because 40 plus 10 equals 50. So that was a good little quick lesson for you guys. You got it, though. You absolutely got it. Thank you guys for just I enjoy this stuff, so thank you. All right, so next one. Of course, we're going to exclude rent every time, every year, and again, tuition as well. And so again, we're looking at, again, our total direct cost was $292,000 once we do our exclusions. Then our modified total direct cost, because again, remember, we're modifying the cost when you're calculating the indirect cost rate, okay? All right, so then again, we'll use that de minimis rate, which we'll go over at 15%, and that will give us our modified total direct cost at, let me see, next one. So our indirect cost rate will be $22,950, and that is the amount that you would actually put on your budget detail worksheet in Just Grants, okay? All right, thank you, guys. All right, so next slide. We have a lot of good questions coming in, and remember, we're going to be getting to them soon. Types of indirect cost rates. Okay, we'll talk about that. All right, so we have what's called a negotiated rate. All right, so the negotiated rate is just a temporary rate until your final indirect cost rate approval is done. So here at OJP, we do negotiate indirect cost rates. Back one slide there, please. All right. Yep. So we have a provisional rate. That's your temporary rate. And then we have a final rate. That's based on your actual cost. Once you get the final rate, that's not subject to adjustment. That's your final rate. And then we have for the states, and we talked about that SWAC cap, and we'll have that picture up on the board in a second, but we do have a fixed carry forward rate. That's kind of when we true up those numbers and we carry that number forward, the adjustment to kind of true up the number. This is only for states. States with that SWAC cap, you'll have that fixed carry forward rate that we will carry forward. And then we have the infamous de minimis rate. That is the rate that the government actually allows you to charge for your indirect cost rate. Let's just say you don't go through the process of negotiating an indirect cost rate, and her team will go over that negotiation process that you would need to submit your proposal if you do want to get a federally negotiated rate to put in your budget proposal. But let's just say you don't want to go through that process, and you can estimate, my indirect cost for this particular grant may be around 15%, and I want to recuperate that. So the government, we give you that 15% allowance. But when you use that 15%, if you are going to use that and to recoup some of those indirect costs, I would say that you only can use that if you're using the modified total direct cost. So you just can't use it and say, okay, I'm going to put this against my direct cost. No, if you use it, again, you must use it using the modified total direct cost method, what we just went over, just those exclusions. Okay? All right, next slide. Okay, so the de minimis rate, organizations that do not have, I just talked about this. If you don't have one, then you can actually use that 15%. Again, you must use, I'm just reiterating this, you must use the modified total direct cost base. And when you're putting that in your budget, you just kind of have to show us, like, I'm using that, you can just write it in that summary. I'm using the modified total direct, I'm using the de minimis rate based on the modified total direct cost of blah, blah, blah. Otherwise, we're going to send it back and we're going to say, okay, what's your modified total direct cost? So just make sure you're using that cost base when you're actually calculating that de minimis rate. Okay? All righty. Next slide. And again, I'll go over this kind of quickly, just the fixed forward rate. Just know that this is for the states again, and we have this rate, and so basically, so it's just that the state financials, the audited financial statements are kind of delayed many times, and so we basically always give the rate is done on a 2-year basis, and by the second year, we basically just true in accounting terms we say true it up. We just it's almost an estimate at the beginning, and then we come back and say, okay, this is really what it is. And so now we'll make that adjustment either up or down, depending on if we've overestimated or underestimated. And what we'll do is we'll take that rate and we'll carry it forward to your to give you your rate. That's the fixed carry forward rate for states only. Next slide. And again, this is the same as the fixed carry forward rate calculation. We don't have to go over that. You will have the slides. Someone says I'm cutting in and out. I'm trying to put it a little closer to me. Hopefully you all can hear me a little better. Okay, so we'll go to the next slide. And this is that calculation I was telling you about that most of the times that your contractors will do for the state. So many of you on the line really won't do this calculation, but just again, this is just, if you look at the bottom, it says over, under. This is what was estimated. These were the actual costs, and then we take that carry forward number, and that's how we get the total pool, and this is how we now calculate the state's indirect cost rate. Again, we use that SWACAP number. Remember, I talked about that earlier, those shared services that the federal agencies will use, and they will take the SWACAP number and then make that adjustment accordingly. Again, we could talk offline if anyone needs help with fixed carry forward rate calculations, but a lot of times that's actually done by contractors. All right, next slide. All right, which one is not an indirect cost rate type? And we talked about that a second ago. Is it a final rate, variable rate, provisional rate, or fixed carry forward rate? Okay. I thank you guys for listening. I do. So the one rate on this particular slide that is not an indirect cost rate is actually the variable rate. So we use the final rate. Again, we use the final rate. We use the provisional rate. Again, like I said, we will give a temporary rate, and then we use that fixed carry forward rate. That's the rate for the state, okay? So final, provisional, and fixed carry forward. Those are the 3 rates. All right, next slide. Cognizant agency. Okay, you may have heard that term a time or two, but let's talk about cognizant agency. That's the agency that will negotiate your indirect cost rate. That's the agency that you have the most federal direct funds, the agency that provides you with the most federal direct funding, excluding pass-through. So this is not including the pass-through funds, but let's just say, and we got a great example on the next slide. So this is your cognizant agency will be the agency that's giving you the most funding. That's who will negotiate your indirect cost rate. So let's, next slide, we'll look at an example of that right here. Maybe on the next slide, but the cognizant agency will not change for 5 years, many a times, and 3 years for nonprofits. The rate should be accepted by all federal awarding agencies. The cognizant agency negotiates indirect costs on behalf of other federal agencies. So if we're your cognizant agency, we give you the most amount of funding, then we will negotiate your rate, and that rate you will use across all your federal government grants. Okay? All right, next slide. All right, so based on this, so we see, and remember I said your cognizant agency is the agency that gives you the most amount of direct awards, not including your pass-throughs. So if you look at this chart here, ABC Company doesn't have a negotiated indirect cost rate and wants to now apply for a negotiated rate. Now they have to determine who is their cognizant federal agency. Who do they submit their proposal to? Who do you think on here? Okay. I'm watching the answers come in the chat. Someone said DHHS. Why? Because they have 5 million and 3 million. Okay, so I'll tell you that the answer is definitely somebody. No, a lot of people saying DHHS. Okay, so I'm glad you all are. That's fine. So what I want you all to look, I want you to look at the chart again. So remember, I said it's direct awards. So we're not counting when we start talking about cognizant agency. So you may like DHHS, although they have 5 million in pass-throughs, 3 million in direct awards. That's 8 million total. So it may look like they're the cognizant agency, but remember, we're not counting the pass-throughs. So we're almost eliminating the second column with all of that. So we're really looking at that last column of direct awards. That's very important. So because sometimes people will submit to us and then we'll realize once we look at their schedule of federal expenditures, or we'll look at and we'll see that we're not their cognizant agency, and we don't want you to just waste your time trying to send it to us, and then it take us a while to review it, and then we realize, oh, we're not even a cognizant agency, and we should not be negotiating this rate. It's only the amount of direct awards, not the pass-throughs. So if you do have some pass-throughs in there, do not count that towards your who will be your cognizant agency, by the way. So DOJ in this particular instance will actually be the cognizant agency because it's $5 million of direct awards as opposed to the 4 and the 3 from the other agencies. So if you do have pass-throughs, watch those pass-throughs. If you're going to ask for a negotiated rate from DOJ, make sure that we are the cognizant agency. Okay, next slide. Once the cognizant agency approves the indirect cost rate proposal, the indirect cost rate will not be subject to audit. Well, that's an easy one. Will not be subject to audit. Of course, that's false. No one said true. No, it's definitely not true. It's definitely false. Of course, anything. I mean, you'll be subject to audit. So once we negotiate that rate and we say this is your final rate, we will sometimes have monitors come out and they will actually look at your indirect cost proposal and they'll make sure that you're applying it correctly and making sure that you're applying it exactly as you said on your indirect cost proposal and within your budget as well. So certainly subject to monitoring to compliance, you must comply. Once we give you that final rate, that's the rate that you can use on your accounting books as well. All right, next slide. Okay, I think at this time, I thank you all so much. I'll still be here, and again, our team is taking all the questions from the chat, and I'm going to start preparing to answer them. But at this time, I will turn this over to my esteemed colleague, Hatim Rita, who will actually finish the rest of the presentation. Thank you all so much.
Thank you, Crystal. My name is Hatim Rita. I'm a staff accountant with OJP in OCFO Grant Financial Management Division. So now we will look at the indirect cost negotiation process. So let's go to the next slide. So this is a high level, like a flow chart that shows the high level steps in the indirect cost proposal review. So grantee submits first the indirect cost proposal to the indirect cost email address. We have the email address on the next slide. And once we receive the proposals, we will send out a confirmation email. And then OJP will start reviewing, and there are like a couple of a two-step level of reviews. Once we review and approve, we will send out the NIACRA, which is the Negotiated Indirect Cost Rate Agreement, for you to sign. And then once the grantee signs and returns the agreement, we will sign the final agreement and send it out to you. So let's go to the next slide. Next slide. Yes. All right, here, indirect cost proposals and all required documents must be sent to this email address, which is ocfoindirectcost@usdoj.gov. So after submitting the proposals, what you need to do is you need to make sure that you received a confirmation email from this email address. And the other thing that you need to do is make sure that you respond to any of the questions that OJP accountants sent to you. Any missing documents, concerns, or questions need to be addressed on a timely basis so that we can finalize your rate as soon as possible. Next slide. Okay, so indirect cost rate proposal must be submitted to OJP within 6 months after the close of the entity's fiscal year. So we want to give you some time so that you can finalize your year-end audit. And then once the audit is finalized and you have the audited financial statement, you should be able to send us your indirect cost rate proposal. So next slide. So when you submit indirect cost proposal to OJP, these are the required documents. I mean, not all are applicable to every entity, but you have to send us whichever is applicable to your entity. The required documents are, you have to send us your indirect cost rate proposal. That should show your worksheet, how you come up with the rate. The details should be in this indirect cost rate proposal. The other documents that we require is indirect cost rate certification that needs to be signed by your designated official. And then audited financial statements is also a required document. Once audited finalized, please make sure to send audited financial statements, not the draft financial statement, the final audited financial statement. And then we require also a list of grant funding or CFA. You know, some of the entities may not prepare CFA. If you don't have CFA, make sure to send us list of active grants that you have and the respective expenditures for each grant. And then we also require organizational chart. This is only if it's your first time or if there are any organizational structure change. And the other thing we require, which is only for state governments, the statewide cost allocation plan is also required. We also require cost policy statement. I think we have more required documents. Let's go to the next slide. Itemized direct and indirect cost pool, we need to see that, and this needs to reconcile with your audited financial statement. The total direct plus indirect cost needs to match with your total expenditures. We also want to look at list of subawards. Anything above 50,000 needs to be in the list. Personnel cost worksheet, usually this is required for fringe benefits for those who want to negotiate fringe benefits rate too. And the other one is fixed plus carry forward calculation. This is only for states who are requesting fixed carry forward rate. Last but not least, copy of last negotiated rate. So if you have a NACA for a prior year, please also include that as part of your request. So let's go to the next slide. Okay. What are your responsibilities? What are grantees' responsibilities? Your responsibility is when you calculate indirect cost rate and submit your proposal, make sure the rates are allowable, reasonable, and necessary. And you have to make sure that these costs are treated consistently. You know, some costs can either be direct or indirect, but once you start treating them as indirect, make sure you consistently treat them from fiscal year to the next fiscal year, also from one grant to another grant. And you have to make sure it is in compliance with US GAAP, Generally Accepted Accounting Principles, and all the costs are allocable to federal programs, proportional to benefits received, and adequately documented. So all these are grantees' responsibilities. So next slide. Okay, for rate extension, negotiated rate extension, 2 CFR 200 allows extension of a negotiated rate for a period of 4 years. When it comes to OJP, a request for a one-time extension of a current negotiated rate may be approved for a period of 1 year. The reason for this is because usually when we give a final rate, when OJP or DOJ gives a final rate, we include a 2-year provisional rate. So we already give you like a rate for 3 years. So whenever you come and ask us for extension, we can only give you one more extension, extension for a period of 1 year. That's the reason. So next slide. Okay, this is test your knowledge. How much time from the end of the award recipient's fiscal year does a grant recipient have to submit a current indirect cost rate proposal? 12 months, 2 months, 6 months, none of the above. It looks like most of you are saying 6 months. Yes, you're right, 6 months. We give you enough time so you can finalize your audit. So after the end of the fiscal year, you will wait for 6 months. So you have to submit your proposal within that 6 months. Thank you. So let's go to the next slide. Okay, now let's look at indirect cost budget. Next slide. Okay, in order to include indirect cost budget as part of your grant application, the 2 key things that you need to have are, 1, indirect cost rate, and the second one is direct cost base. So for indirect cost rate, you can use a negotiated indirect cost rate if you have a current active federally negotiated rate, or if you don't have a negotiated indirect cost rate, you can also have the option to elect de minimis rate. So, for example, I have one example down here. Let's say modified total direct cost base is 100,000, and indirect cost rate using de minimis rate is going to be 15,000, because now the de minimis rate has gone up from 10% to 15%. So 15% multiplied by the modified total direct cost base of 100,000, you will get 15,000. So you can include up to 15,000 of indirect cost rate in your budget. So next slide. Now let's look at what you can include or exclude from the direct cost base. So in the direct cost base, you cannot include the non-federal share amount, which is the match amount. So some of the grants require match, right? 20%, 30%, or something like that. So if your entity is matching toward this grant, that match portion cannot be included as part of the direct cost base. You need to exclude the match portion. We have example here. Let's say, for example, the total direct cost equals to 100,000. And out of that 100,000, if your entity is required to match 20% of that, which is 20,000, and the federal share is 80,000, the direct base that you can include is only the federal share amount, which is the 80,000. Let's say the grantee has a negotiated rate of 20%. Then you can include 20% multiplied by only the federal share amount, which is 80,000. That will give you 60,000. So you can include up to 60,000 in your indirect cost budget. Let's say you don't have a negotiated indirect cost rate and you elected to use de minimis rate, then you multiply this 80,000, which is the federal share, times 15%, which will be 12,000. So you can include up to 12,000 in your indirect cost budget. So the match portion cannot be included on the direct cost base. So we can go to the next slide. Okay, indirect cost as a match. Now let's go to the indirect cost category. So in order for you to include the unrecovered indirect cost as a match, you need to have a federally negotiated indirect cost rate. You cannot claim indirect cost as a match using de minimis rates. So I think this will be more clear when we do an example in the next slide. So let's go to the next slide. For example, XYZ's modified total direct cost base is 100,000, and XYZ has a federally negotiated indirect cost rate of 20%. Then XYZ can include up to 20,000 in the indirect cost budget as a match or as a federal share, or split this 20,000 between a match and federal share. However, let's say if XYZ does not have a federal negotiated rate and elects to use de minimis, in this case, XYZ can only include 15% of the modified total direct cost base, which is 100,000. This 15,000 only as a federal share only. So if there is any unrecovered indirect cost, XYZ cannot include it as a match. So we are talking about the indirect cost budget category. So in order for an entity to claim unrecovered indirect cost as a match, that entity needs to have a federally negotiated indirect cost rate. With de minimis, that entity cannot include it as a match. So let's go to the next slide. Okay, so now for the budget narrative, which is the indirect cost budget narrative, we don't, like when you submit your budget application, make sure to include a budget narrative. So that budget narrative needs to specify what type of indirect cost rate you're using. Are you using a de minimis rate, or do you have a federally negotiated indirect cost rate? That needs to be stated in the narrative. Also, you need to show how the direct cost base is calculated. If you are excluding some of the costs, please state that. So we have a sample example of how a narrative should look like. For example, ABC company currently does not have a federally negotiated indirect cost rate and elects to use the de minimis rate of 15%. The modified total direct cost base for year one excludes sub-award in excess of 15,000 and equipment budgets from the total direct cost. So when you have this kind of detailed narrative, it will make the review process so much easier for us. So make sure to state these two things in your budget narrative. Let's go to the next one. Okay, reminders, indirect cost budget reminders. So whenever you're using indirect cost, negotiated indirect cost rates, in order to claim indirect cost budget, make sure to attach a current negotiated indirect cost agreement. And like most of the time, if you don't have a current negotiated agreement, we will send it back to you, or we will hold the award until you submit active or current indirect cost negotiated agreement. The other reminder is when you claim indirect cost, the base that you use should only be federal share. Exclude any match amounts. Last but not least, for any dollar increase or decrease from the approved budget, you have to initiate a budget modification gap. So for other budget categories, we have, I believe, a 10,000 or so threshold. So for indirect costs, any dollar increase or decrease, you are required to initiate budget modification gap, unlike other budget categories. So let's go to the next slide. Okay, recently OMB revised the uniform guidance. So on the next slide, we have a summary of the major changes that will impact indirect costs. So the OMB increased sub-award threshold for calculating indirect costs from 25,000 to 50,000. So these changes are effective October 2024. So these are applicable now. The other one is increased single audit, the audit requirement for single audit for from 750,000 in total expenditures to $1 million, and increased de minimis indirect rates from 10% to 15%. And last but not least, equipment threshold increased from 5,000 to 10,000. So I believe I saw someone asking about this this equipment threshold increasing from 5,000 to 10,000. This is not for excluding equipment from modified total direct cost base. This is for capitalizing fixed assets to equipment, a capitalization threshold. So this has nothing to do with modified total direct cost base. Let's go to the next slide. Okay, now let's look at the frequently asked questions. If a non-federal entity's last negotiated indirect cost rate was 9% of modified total direct cost base, and the rate has since expired, can the organization elect to use the de minimis rate going forward? The answer is yes. The answer is yes. Grantee must apply across the board for all federal grants. So you can anytime decide to change from negotiated to de minimis, as long as your negotiated rate expired. The second question is, does a non-federal entity using the de minimis, let's go back to the, yes. Does a non-federal entity using the de minimis rate need to provide documentation to substantiate its cost? No, you don't need to provide the documentation, because the main purpose of de minimis rate is to reduce burden for small non-federal entities. So no documentation required for de minimis rate. Just to state in the narrative that you're using de minimis rate and you don't have a current or active negotiated rates. Okay, let's go to the next slide. If the subaward is made up of several individual funding agreements, does each individual subaward require including up to 50,000 in the modified total direct cost base? I think Crystal repeatedly mentioned this. So the allowance of 50,000 is for one time during the period of performance per individual subaward. So it's for the total period of performance. It's not like by year. So I think Crystal already explained this. And can an award recipient that does not have a final indirect cost rate close out the award using provisional rates? Yes, we accept provisional. At the time of the closeout, let's say if you cannot finalize a final rate, we accept provisional rates. You can close the award using the provisional rate. So let's go to the next slide. Okay. When is a budget modification GAM or grant award modification required for a change in indirect cost budget? So we talked about this. Unlike other budget categories, for indirect cost budget, you need to submit a budget modification GAM for any dollar increase or decrease from the approved budget. So yes, you need to provide GAM, budget modification GAM. Can an award recipient claim indirect costs at a rate lower than on the approved negotiated agreement? Yes, the award recipient can charge indirect costs up to the approved negotiated rate. Let's say if you have a 25% in negotiated rate, you can claim up to that 25%. You can claim 5%, 10%, as long as it doesn't exceed 25%. That's okay. So let's go to the next slide. Okay, now I think we can go through the questions. I think
Hi, yes. Now we'll go to the questions. I know that many of the questions have been answered in the chat. I think Crystal will now walk us through some questions. And again, we do have our OCFO colleagues as subject matter experts on the panel who will also answer the questions if they have not been answered during the chat.
Ira, I believe you're up now.
I'm sorry, Ira maybe had some technical difficulties perhaps. Angie, did you capture the questions as a backup? I know Ira was doing that as well.
Yes, I'll go ahead and read the questions, Crystal.
Thanks, Angie.
Okay, the first question is, can we get these slides emailed so I can take notes now, or that won't be until after?
Crystal, you still need me to start reading the questions?
Yes, I think you and Angie or either
Okay.
or. Yep,
Okay. The first question I have here is, can you take a few minutes to discuss benefit rate? Does a proposal need to be submitted if a flat fee is to be used versus using a monthly accrual?
Yes, we negotiate fringe benefits rate too, and other federal agencies. Your cognizant agency should be able to negotiate fringe benefits rate for you. So if you attach a negotiated fringe benefit rate, we accept that, and that you can use that flat rate to charge a fringe benefit rate.
Okay, thank you. Next question. Does the direct cost contain both salary and fringe or just salary to base your indirect cost rate?
That depends on the base that you choose, like depending on your proposal. Some entities choose only direct salaries, some choose direct salaries plus fringe benefits, and some choose the modified total direct cost base. So it's up to the entity, whatever is most beneficial to you.
Next question. Is equipment excluded regardless of cost? I had thought it was up to $5,000.
Yes, it's excluded regardless of cost, but in order for an expenditure to be treated as an equipment, it has to, there's a threshold. So that threshold has gone up to 10,000 now. If you have an equipment that exceeds 10,000, if you have an expenditure that exceeds 10,000, that may qualify as a capital expenditure or as an equipment. So if it's an equipment, it has to be excluded from the modified total direct cost base. The reason we exclude equipment from the base is because it's going to distort the indirect cost rate because the amount is too high.
Okay. Next question. What about participant support costs? Are contracts over $50,000?
Those need to be excluded too. Participant costs are not included in the modified total direct cost base or any other direct cost base.
Okay. Who determines the modified total direct cost when applying for a federal indirect rate? Would the applicant determine it or the cognizant agency that approves the indirect cost rate?
Can you repeat the question again?
Who determines the modified total direct cost when applying for a federal indirect rate? Would the applicant determine it or the cognizant agency that approves the indirect rate?
The applicant determines it, and then they include their calculation as part of their indirect cost proposal. They will submit it to their cognizant agency. Cognizant agency is responsible to verify or confirm their calculation.
Okay, thank you. Can a county claim the de minimis indirect cost rate of 15% on a federal grant?
Yes, if they elect to use de minimis rate, and if they don't have a negotiated indirect cost rate, yes, they can elect to use a de minimis rate.
I think they're talking about the county, not not.
Yeah, I believe counties have the option to either choose cost allocation plan or to negotiate indirect cost rate, right, Bill? Or maybe Bill can explain this. Yes, they don't have a cost allocation plan, or if they don't have a negotiated rate, I believe they can choose de minimis rate.
Can subawards be split between years, like $25,000 for each year?
As long as it doesn't exceed the 50,000 limit, it can be, but it's the 50,000 is per individual subaward throughout the performance period.
If you had a negotiated rate, does that mean you can never go back to the de minimis rate again?
For Krista, you want to answer that?
What's the question again?
If you had a negotiated rate, does that mean you can never go back to the de minimis rate again?
Oh, no, so that's changed. That used to be the case, but no, now you can use the de minimis rate even if you had a prior negotiated rate.
As a state agency, do we need to review a subrecipient's use of indirect cost rate collected?
Bill, maybe, can you answer this? Bill, Kim?
Yes. The state, if you're subrecipient, then they require to monitor that.
Equipment increased to $10,000. So can we charge the indirect cost rate to equipment under $10,000?
Can you repeat that?
Equipment is excluded. When you're doing the modified total direct cost, you're excluding equipment regardless of the amount.
What if an organization decides to use 15% de minimis, but in actuality, the rate works out to be 12%?
Absolutely fine. You can always go lower than the rate.
Will there be a new indirect cost rate coming out soon?
And if you're talking about de minimis rate, it got recently revised and gone up from 10% to 15%. So that's effective October 2024.
What is the anticipated timeline to go from start to finish in the process?
It depends, depending on, it's different from entity to entity. Some are less complicated and takes less time, and some are more complex and takes time. So I don't know, Bill, I would say 6 weeks, a month to 6 weeks is the max, right, Bill?
90 days is the max.
Okay.
Are all, and let me emphasize, underline all fringe benefits eligible for the indirect cost rate?
No, it's only federally required.
Is the indirect Is the indirect cost rate will be determined on actual expenses from the past fiscal year or estimated expenses for the upcoming year in which the indirect cost will be charged?
The rate is on the actual expenditures. That's why we're asking the audited financial statements.
Can we get an extension on our current indirect cost rate if our audited financials are not completed within the 6-month time period?
Yes, you can, and we can grant you an extension for a period of 1 year.
What is the package of, I'm sorry.
I want to add, we'll give an extension up to 1 year because remember, we give you a final rate plus we give you a provisional rate, which is 2 additional years. And so we're giving you that rate provisionally for 2 years, which is kind of an extension in itself. And then with that, we also give a 1-year extension.
Okay. Where is the package of documents that needs to be submitted, and where do we submit if DOJ is our cognizant agency?
On the slide that we just used for our presentation, we compiled the list of required documents, so you can use that.
And I
Also on the, go ahead, Kim. Kim, you can go.
go ahead, Krista.
Okay, and also Greg actually just also put it in the chat, I believe, as well, as to where you can go to get the information. It is on our website as well, where you can get the information of what's needed in the proposal. And I think it just was added to the chat.
Okay, thank you. What if you have an award with multiple fiscal years and you get a new negotiated rate every fiscal year? How can we get a hold of the fiscal year we had an improved indirect cost rate released? Should we use a GAM?
Can you repeat that? You got it, Kim? Kim has it.
Yes, when you guys want to increase or decrease the indirect cost, when you find out the new rate, you should submit a GAM, a budget mod GAM.
How should we budget for the future years of indirect costs?
You can use your current rate, and then once you negotiated a new rate for the future years, you need to submit budget modification GAM because the new rate might be a little bit higher or lower than your current rate. So that will change the indirect cost that you're going to claim. So for any change, like we said earlier, for any dollar change, you need to submit budget modification GAM.
I think this has been answered earlier, but this is asked a little differently. My understanding was that you cannot use a de minimis rate if you had an approved rate in the past. Is that correct or not?
Yeah,
Crystal, yeah, it's changed. It used to be the case, but it has changed. Yeah.
Every year, our indirect cost rate changes. Does that mean that every year I have to do a budget GAM? What rate would I use on a multi-year project? And do I need to go back and change every year's calculations?
Yeah, I think we answered this too. For your budget, you're going to use your current rate. But in the future, when the rate changes, you have to go in Just Grants and submit a budget modification GAM because your new rate, your new negotiated rate is going to change. So for any change from the approved budget, you have to initiate budget modification GAM.
Do we need to reopen an award and adjust the rate if we used a provisional rate and now we have a final rate?
Yes. Once you get the once you get the provisional rate, you need to get a final rate in order to move forward.
Okay. What will be the equipment new threshold date for purchases? Wait a minute, let me read that again. What will the equipment new threshold date be for purchases?
That is October 1st, 2024.
Yeah, October.
If your negotiated indirect cost rate has expired because no one was on staff to submit 1 year, can we use the de minimis rate?
That is correct.
Is it required to submit a negotiated indirect cost rate proposal within 6 months of the closing of the fiscal year? What happened if the audited financial statement is completed by the end of the 6 month? I'm sorry, I guess they meant not completed.
They can ask for extension. So usually we let it go, but otherwise we give you a certain additional 30 days or 60 days.
If the indirect cost rate agreement changes and there's an increase on indirect costs, do we need to submit a GAM to modify the budget with the new indirect cost rate? I think we covered this one earlier too.
Yeah, they need to submit again to change the rate.
Can an award recipient claim indirect costs at a rate lower than the de minimis rate amount? For example, can an award recipient claim 10% on some awards and 15% on others?
They could go lower.
As long as it doesn't exceed the 15%, they can do so.
Can we use a fringe rate and a de minimis rate?
No.
If we receive over $50 million in direct awards, can we use a de minimis cost rate?
My understanding, if over 35 million over direct award, you need to go to DHHS.
If our actual expenditures exceed the budget, the grantee can either revise the budget or refund the excess, which is unallowable without prior approval as per 2 CFR. Is that correct?
I didn't get the first part, so can you repeat?
If our actual expenditures exceed our budget, should we either revise our budget or refund the excess, which is unallowable without prior approval as per 2 CFR?
I think they
the only
the question. And so, I mean, the thing is, you can't go with your federal approved award amount. You can't go over that amount. So there's no exceeding the budget. You just that you're out of compliance to exceed the budget. So I'm not. And then they say that's unallowable. So they kind of answer the question too. So I'm not sure.
Yeah, they did.
Yeah, so you can't exceed whatever the federal approved amount is. You can change between categories, but the categories, even the budget modifications, has to still stay within the federal approved amount of that award.
Yeah, in addition to...
Oh, go on, sorry.
Anything over federal budget, that means, you have the grantee has to accept that as, their operating cost.
Did you say that unused indirect costs can be used as match?
Yes, yeah, and recovered indirect costs can be claimed as a match, but The only way you can do that is if you have a federally negotiated rate. You cannot do that using de minimis rate.
Okay, we've answered this a couple of times, but I'll read it. If a current grantee with the updated de minimis indirect cost rate increased from 10 to 15%, do we have to increase our rate from 10%, or can we, or we don't have to?
You don't have to. It's up to your grantee.
As a grantee, can we go back and draw down for the months we never included the indirect cost rate?
No, you have to put in the budget before you can roll out indirect costs. If you don't have it on an approved budget, no.
With the increased audit and major program threshold from 750,000 to 1 million, what does that exactly mean regarding our audits?
You got to understand single audit versus indirect cost requirement. The single audit requirement is $1 million from as of October 1st, but our requirement as of indirect cost proposal is a totally different story. So basically, our requirement to submit the grantees in a financial statement every year to get an indirect cost rate.
Just to add to that, if your total expenditure is above 1 million, then that means you're going to go through the single audit. You have to prepare a CFA, and the CFA has to be audited by external auditors. So if your expenditure is below 1 million, then you're not required to prepare CFA.
Can we apply for an indirect cost rate in advance of applying for a federal grant, or do we have to have an open award at the time of our application?
That is correct. You got to have an open federal award before you apply for indirect cost rate.
Regarding modified total direct cost, did the definition of equipment change to $10,000 along with the change in uniform guidance?
So the threshold increase for equipment from 5,000 to 10,000 it doesn't impact how you calculate modified total direct cost base. It's the same. Modified total direct cost base, any equipment needs to be excluded. If it's capitalized, it needs to be excluded from the modified total direct cost base. So that doesn't change the modified total direct cost base definition.
When a county uses de minimis rate on a federal budget, does that county need to use it on a state budget as well?
You want me to answer the question? No, answer. Go ahead, Kim.
No, this is for federal grant. The state, it's a different situation. It's federal grant, so they can elect to use the minimum rate for federal grant.
On an existing award, can we increase the indirect cost based on the new rate agreement?
Yes and no. If you already use 10% as a de minimis rate, you cannot raise. But however, if you never use 10%, then you're allowed to use 15% as of October 1st, 2024.
Are we allowed to go over the 6-month requirement?
I think Bill answered it earlier. If you're passing the limit, you need to let us know. We might give you extension up to 60 days or something, right, Bill?
Yeah, 30 to 60 days. Depends on how much time do they need it.
Okay. Next one has been answered. Next one's what if you plan to get an approved rate but not before the project ends?
Can you repeat the question?
What if we plan to get an approved rate, but not before our project, but the rate is not approved before our project ends?
Oh, then you cannot, charge indirect cost. You don't have an approved rate, right? You have to either select if you don't the minimum rate.
It's gotta be in the budget before they charge any indirect cost.
Okay, this one I think we've answered, but we are a state agency whose negotiated indirect cost rate expired at the end of June. No one submitted a request for 2024 because we lost the position, which I think it means we lost the person who took care of that in our agency. We do not have a new request ready and it needs to be submitted by December. Should we try to get that in before the end of December, or do we use the de minimis rate? If we use the de minimis, will we have to do a budget GAM for each federal grant that we have?
State government is not allowed to use the diminished rate. They can call me or they can email me about the situation so we can talk about it.
If the rate changes, do I need to do a GAM if it doesn't exceed the budget indirect cost rate? Will we just collect the indirect cost at an accelerated rate up to the limit?
You can charge a rate less than the agreement, then it's okay. Then you don't need a GAM. Only if it exceeds the, if you will increase the indirect cost rate.
Okay, the next one's been answered. Okay. A GAM may be initiated for a budget modification if the request is to modify an approved budget and to reallocate funds among the budget categories. Award recipients must indicate a GAM for the budget modification if the proposed cumulative change is greater than 10% of the award amount. The 10% rule does not apply to an award less than $250,000. For example, if the direct cost category travel does not exist in the original budget, the adjustment to transfer funds from equipment to travel would require a GAM. Is that correct?
That is correct. If you uncategorized budget, then later on you plug back in, that needs to be required to submit budget modification GAM.
If the provisional rate is lower than the approved indirect cost rate, can we do a GAM with the approved rate that is higher than the provisional rate?
Normally, a final rate is the same as a provisional rate. I don't understand that situation.
Yeah. If in fiscal year 2022, my indirect rate is 33%, and in 2023, my indirect is 35%, and in the next fiscal year, it's another rate, do I have to calculate each fiscal year, and how does this get reflected in, or how would I reflect this in a GAM? This is for a multi-year award.
That is correct. You need to submit every year different. If the approved indirect cost rate up and down, they need to submit every year.
Just to clarify,
Time
I'm
check.
sorry.
I just want to do a quick time check. It is 3:33. So do we have a lot more questions or?
We have actually only two more that have not been answered already.
Okay. All right. So we'll do those last two, and then any other questions we can probably send out with the slides maybe. I'm not sure how we'll do that. I'll talk to Crystal how we can do that, but I just want to be cognizant of the time. Thanks, Ira.
Okay. Did you want to do the last two, or you wanted me to just?
Yeah, I think we can do the last two.
Okay. Can we use the de minimis rate without a GAM?
No. If you haven't, if the original budget did not have the indirect cost, and you want to use the de minimis rate, you have to submit a budget mod GAM.
And this will be the last question. Is a GAM required to adjust a state agency subrecipient indirect costs up to the 15%?
If it's a
Subrecipient indirect costs.
subrecipient and it's appear on the OJP budget as support, then it's included in there. Then it should be state responsibility, unless it appear on our budget indirect cost. Then it shouldn't be on there. So those state responsibility in the support category.
That's it, but we have all the questions, Crystal.
Okay. Thank you all so much for attending. I do believe that there is a link in the chat for you to, or there's a QR code actually here as well. There's a link in the chat and a QR code for a webinar evaluation survey. We do thank you for just taking time out to learn more about indirect costs. We are always here to help you. We are the Office of Chief Financial Officer. We're always here to answer your questions. You can reach out to your program grant managers as well. They're equipped to answer your questions, or they will send those questions to us as well. We do have an indirect cost email box for those proposals. And so have a great day. We really enjoyed having all of you, and we enjoyed all of your questions, and we'll make sure if you do have an additional question, email us, and we will get that response back to you as well. Thank you so much, and please, please enjoy the rest of your day.